Ladies and gentlemen, welcome back to the channel. We have a lot to get into in terms of AMC stock as well as the broader markets. AMC is up over 6% today. Definitely a strong day out there for AMC stock. So we got some technicals to get into. It's the data today. Oh my gosh, did you guys see the data today? Absolutely off the chain, bro. What is going on? Is the government like cooking the data or something? When I seen that number today, I almost fell out of my chair, literally. Let's go ahead and get into it, guys. We have a lot to cover in a very short amount of time. Hit the like button and subscribe to the channel and source your comments, questions, or concerns down below in the comment section. So that's exactly what we're going to start off with is the economic data in which, like, literally I almost fell out of my chair. Okay. The jobs report. What? Say what? So, it looks like... let me just get the overall number here. I might have to just go to the calendar, okay? 336,000 jobs. What? We were expecting 170,000 jobs. 336,000 jobs. What? That's insane. Okay? So, very, very weird what's going on here. Now, a lot of people thought if the jobs report came in hot, that we could fall 1,000 points on the Dow. A lot of people were pretty dang negative. Now, on one hand, yeah, it's not great for bond yields. It's not great for a tight Fed policy. On the other hand, there is a positive to it. The positive is that the economy is hotter than your skillet in your kitchen, okay? That's, I guess, the positive, right? If you're in hard landing camp, it's hard to say we're going to have a hard landing if we're adding 336,000 jobs a month. But again, I mean, it's almost like these numbers are cooked at this point, just given how wildly strong they are. Even the past 2 months, the revisions also went higher. I believe these were like 180,000. They were revised like 40,000 a piece, give or take. July was really revised. I believe that was like a 60,000 upwards revision. So it's very strange what is going on here. Let me know what you guys think down below in the comment section. But apparently, most of the jobs came from leisure and hospitality. The government hired 73,000 workers. That don't even make sense to me. Probably IRS agents. That is just a crazy number. Healthcare, social assistance, up 65.9 thousand jobs. Professional business services up 21,000. Retail trade up 20,000. Manufacturing up 17,000. Wholesale trade up 11.7 thousand. Construction up 11,000. Transportation plus warehousing 8.6 thousand. Utilities 4.8 thousand. Financial activities 3,000. Mining plus logging 1,000. Information dropped 5,000 jobs. So basically everywhere gained jobs. Basically. Leisure, hospitality, you've seen some weakness there recently, but apparently we just hired a lot of leisure and hospitality jobs last month. So what essentially is the problem? The Fed has been saying higher for longer for a while now. The markets finally actually realized, like, hey, they actually mean like higher forever. So the long end of the curve, your 10, 20, 30-year bonds started rising dramatically, okay? And this really affects your mortgage rates, your auto loan rates. This affects all of your rates. Whereas when the Fed raises rates, they affect the short term. So the Fed now, as of the last summary of economic projections, the last Fed meeting, the markets realized the Fed means higher forever, and that really disanchored or de-anchored maybe I should say, the longer end of the curve, your 10, 20, 30-year bonds, that has the real effect on the economy. The 2-year treasury rising, the short end of the curve, doesn't have that much of a restrictive effect on the economy. But when your 10, 20, 30 years start to rise, then you're in for a problem. Now, markets were sitting here saying, hey, with this data that is so strong, we don't know how high rates can go. Now that we're seeing a lot of supply hitting the markets from the Treasury, and now that we are seeing just no more buying from the Fed, the Fed's been buying bonds for a very long time. Now they're not doing that. Then it's up to the markets to try to figure out what's a fair yield, what's a fair interest rate for treasuries 10, 20, 30 years down the line. And a lot of investors are sitting here saying, hey, the government is a lot riskier now than it was maybe 15, 20 years ago. And if we don't get lower rates, where should we assign these bond yields? So that's why bond yields on the longer end of the curve have been rising aggressively, very quickly. Now, today you're still seeing that. The 30-year treasury is up 5 basis points today. The 20-year treasury is up 6 basis points today. And the 10-year treasury is up almost 7 basis points today. But the markets are looking at this and saying, hey, we don't even care. We're just buying stocks, right? The 2-year treasury is up about 6 basis points as well. Oil is up about 1%, but markets are saying, hey, we're just going to buy stocks. I think a lot of this has to do with being oversold on the RSI or pretty close to it. You hit some of the lowest RSI numbers at right here, October 3rd, that you have seen since the lows back here in September and October of 2022. So it looks like an oversold bounce to me. That's my initial face value, because even what the markets have been trading on, higher yields sending stocks down, it's not like we're not getting higher yields today. Yields are going higher today, just stocks are not going down. Stocks initially went down in the beginning of trading today. You've seen a gap down in pre-market. This was a almost 1% candle right here upon the initial labor report. Looks like you found support around 420. That looked to be a big buy zone. Probably algos that started kind of holding support, and then it looks like humans probably took it from there, if I were to imagine. So a little bit of algorithmic activity, a little bit of human kind of jump on the bandwagon trading activity as well. I would be very hesitant to say this is the end of this recent drop that we have seen in the markets, but today is a pretty good sign. Again, an oversold bounce. Sometimes they can last a while. Sometimes it's like a 1 or 2 day event. So it's really hard to tell. But stocks are going higher today. That's a simple fact of it. AMC stock is up 6% at the time of recording this video. AMC does not have any company-specific news that I can find. If we go ahead and just type in AMC stock news, if there's any big news, it'll come up right here. Nothing too crazy. 19 hours ago, this came out. The Taylor Swift film pre-sale crosses $100 million. Cinema stocks rise. This is really not, I would say, having an effect on AMC stock today. So there's really no company-specific news. A lot of your beaten down stocks are rising today. Some of your big tech names are also moving higher, but a lot of this does have to do with your more beaten down names that are going up, 3 to 5%. AMC stock is definitely an outperformer in that sense. So that's really what's going on today. It's interesting. You're bucking the trend that we have been recently. Recently, we've seen yields go higher, stocks go lower. Today, you're seeing yields going higher, stocks going higher. So that is very different, okay? The unemployment rate, if we do look here, if I recall, it stayed steady at 3.8%. Yep, came in at 3.8%. Some people were expecting 3.7%. Now, this is good. It's right at that level of like, hey, maybe we'll get a soft landing, Unemployment's not skyrocketing, but it's also not coming down even lower again. So I would say this is pretty neutral news overall with the unemployment rate. The unemployment rate over like 4% would have been a bigger problem for the markets, that's for sure. Like I said, AMC stock is up 6.33%. You're trading at $8.83. Now, anything can happen today. Stocks could fall back down. Stocks could continue to rise. There's really a lot of possible outcomes throughout the rest of the day today. But if you look at this channel that I made in one of the last videos, I think it highlights exactly what you want to be watching. It's connecting the point back here, or points I should say, back here on September 29th. So or 27th. So a little over a week ago. You want to see a break above this line. That's going to be right at about $8.90 per share. Call it about $9 per share. $9 per share is a major level ever since we really fell. We got above $9 per share for a brief period back here on September 13th, the beginning of September 14th, and you just did not hold that throughout the trading day, right? Throughout the trading day, you fell back down to about $8 per share. So I believe if we close right here, this will be the highest close we have seen on AMC stock since the reverse split, since all of that were to happen. So if we close at these current levels, up 6.63% right now where we are, I believe that's a strong sign. I believe that's good news, but you really want to see a close above $9 per share. That's going to show you a lot of strength going ahead. $9 per share would probably put the stock up like 8%. Let's see. That'd be another 1.5%, 1.6%. Yeah, that would put the stock roughly like 9% higher, 8.5% higher to end the day to get above $9 per share. That's really what you want to see, but I'm not going to argue with a close right here. I think that sets us up for a very strong next week. So AMC stock is definitely an outperformer today. If you're looking at your portfolio, if you're looking at other small mid-cap stocks that are similar to AMC, AMC is by far outperforming the average stock out there. So that is really, really great news. Now let's take a look at the Ortex status, some of the option activity, all of that. So right now you have a live short interest of your float of 11.77%, 23.27 million shares that are currently sold short. Cost to borrow average 1.2%, cost to borrow max 6.17%, cost to borrow minimum 1.04%. If we do go ahead and take a look at the cost to borrow fees, you got about 1.2%. Cost to borrow max 6.17%. So a little bit higher than those low numbers we've been used to. Some of that does have to do with some of the upside volatility we have seen recently, but you're not at that point where AMC stock, you didn't go up 20%. You didn't go up 30, 40%. When you start to make those kind of moves, that's where the cost to borrow fees really do start to jump. So like I said, the amount of shares sold short, 23.27 million. Something that I do want to point out again for everyone is the shares out on loan just jumped a lot, about 6 million shares, give or take, a couple 100,000 shares. So usually when you see that, odds are some of that translates into the amount of shares that are currently sold short as well. So it looks like the shorts have definitely been adding to their positions. That's, I think, a fair assumption to make at this point. Now, you have a short score of 66, $200 million worth of short positions currently on AMC stock, 12.12% short interest of free float out on loan at 16.21%. Shares out on loan, like I said, 32.07 million. Days to cover, 2.1. Cost to borrow, 2.36. And utilization of 65.07. Option activity, yep, we're not going to get it. It looks like the put-to-call ratio is still at 0.79, which is really good relative to where we have been at. And I think it's really only a matter of time, guys, before AMC stock does make this multi-100% rally like I think it's going to. You're really set up at this point for a much larger upside move. I don't know if that happens upon earnings. I don't know if you need to see anything else, in particular happen. I don't know if you need to see a bullish catalyst happen, or if it could be something along the lines of kind of what we're seeing today. You just start to get bigger and bigger upside moves as AMC stock does start to go higher. If you break above $9 per share, a lot more people will almost instantly get bullish on AMC stock. You might see algorithms start to buy more AMC stock. We've seen firms like Citadel, Jane Street, Sequoia that have turned very bullish on AMC stock as far as their positioning. Those guys are no longer positioned for a fall in AMC. They are upside positioned in AMC. So I think that is also important to point out that, a lot of people have turned bullish on AMC stock as well. Now, let's take a look at the Stocko tracker data, okay? And same thing is true. We're seeing a lot of activity here. Today, you have broken above $8.50 per share, so you got quite a few options that went into the money at that strike. So total for this week so far, you have 37,000 calls in the money. As long as you close above $8.50, that's important. You have let's see exactly how many. That's about 16,000 for open interest that will close in the money, that will need to be hedged for. So that is great news. I think that provides us maybe a little bit more stability heading into next week. If you do close above $8.50, like I said, if you close above $9 per share, you have another 14,000 for open interest that will go into the money at that point as well. Look at these implied volatility numbers, 600+%. That is absolutely crazy. The S&P or the Nasdaq is going to have 20 to 30% implied volatility. Maybe 30% even high there. So AMC stock, a lot of people still bet on AMC to make very big moves. Just so you guys know, you can always look at the implied volatility and get a feel for how people are expecting AMC stock to move. And there's still a lot of expectations around big moves on a week-by-week basis for AMC stock. But nonetheless, you have 2,000 calls currently in the money, or 2,000 puts currently in the money, so nothing compared to the calls. Calls out the money, 68,000. Puts out the money, 55,000. For next week, it's almost 1-to-1 ratio, at least for out the money calls, out the money puts. In the money calls at 18,000. In the money puts at 3,400. Now, the next week, the next kind of biggest option expiration, October 20th, you got about 14,000 calls in the money currently, 106,000 calls out the money, about 18,000 puts in the money, and 61,000 puts out the money. So AMC stock still has more call activity for the next biggest option expiration, which is, again, October 20th, and that is a very good sign. After that, some of the activity does drop off. I think a lot of the positioning right now is really being focused around that October 20th expiration, guys. So that is basically all. Let's see if we have a new GDP estimate from the Atlanta Fed. Let's see. Nope, it's still the same, right at about 3%. That's something you guys should be watching as well, because if that starts to go down, that could be a problem for the markets. The inverted yield curve continuing to uninvert a little bit on the 2s and the 10s. Inverted only 31 basis points now, and on the 10-year 3-month, that actually inverted a little bit more. Now inverted 89 basis points. So if you're looking at that, recession is getting a lot closer. And if you look at the AI investor sentiment chart here, 30.1% of investors are bullish, 28.3% are neutral, 41.6% are bearish. So kind of in line with what we've seen over the past couple of weeks. Slightly more individuals that are bearish here, but again, I think this rally that we're seeing mostly is just an oversold bounce. Who knows? This could lead into a bigger rally. I just don't see a lot of catalyst or reason for stocks to go much higher from here. That's just my personal opinion. The RSI was literally bouncing right off of 30 just 3 days ago. So looks like an oversold bounce. We'll see what happens. AMC stock is definitely loving it, up 7% today at $8.88. And again, if you close above $8.50, that's great. That's strong. That's what you want to see at the bare minimum. If you close above $9 per share, that's where things start to get a lot more exciting for AMC, guys, especially heading into next week. So that is going to go ahead and do it for this video. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.